And on that note, what a nice segue,
To
Mr. Aaron Dunn.
Mr. Aaron Dunn.
Oh,
Oh, what is he going to talk about?
we're at me now.
Tariffs. It's
Okay.
true.
Yeah.
Brennan just cut that segment. We're done with that, eh? That was it. Yours is
Unless
over.
Brett has something else to say, but I hope people read the
You
article.
never
I
know. He
enjoyed.
might.
I
I
enjoyed
could
writing
have
it.
something to say, Brennan.
Yeah.
Yeah, it's probably just
But now
disparaging my
you've cut him
article.
off. Aaron's coming in with Trump's tariff playbook so far.
Obviously, this is not my favorite subject to talk about, but I've spoken about it a couple of times before. Just informing people where we're at with the trade situation, because it's obviously so fluid and chaotic and just changing every day. And even the experts, I think, have trouble keeping up with what tariff is on who and what pause is in effect and which one isn't. So, a big news yesterday. US and China decided to put a 90-day pause on their tariff war, or at least most of it. But I want to break down what really happened in just simple terms so that we can really understand. So, of course, the background, how did we get here? Everybody understands the situation. Trump's Liberation Day tariffs, where he essentially put tariffs on every country in the world. China, in particular, got hit more than most countries. China retaliated, which is typical in a trade war, which led to higher tariffs. So where were we at? About 145% tariffs on goods imported from China into the US, and then China retaliating with 125% tariffs on goods from the US. The escalation and fallout, of course, it went beyond just tariffs. China also launched some other initiatives as well, and one of the most interesting here was the export restrictions on rare earth minerals. So, of course, rare earth minerals are incredibly important for a wide range of critical industries, from transportation to defense to technology, and China dominates that market. They own about 90% of the processing, I believe about 70% of the production. So they essentially put restrictions on rare earths going into the US, which the US does have stockpiles, but over time that would be considered to be a significant national security issue if the US was not able to replace those. The business uncertainty, the market uncertainty, obviously big drops, volatility in the S&P 500, and lots of alarm across the board. But what happened on May 12th? It appears that China and the United States had some discussions which may have been productive. We will see. They decided to put a 90-day pause on their tariffs. So the US tariffs dropped to 30%. So this is the 10% baseline. Plus there's some other 20% fentanyl specific levy as well. China is reducing theirs on US goods down to 10%. So it's not a complete pause, but it's a significant reduction. China ends the other types of retaliation, like the export controls on rare earths, but ultimately no other structural reforms agreed to that we can see right now. And this is just a 90-day pause to be reassessed after, essentially. So the market's reaction was positive. The S&P jumped 3.3% on the news. Temporary relief for multinational companies from the US, also any retailers with China exposure. But analysts saying that this is really a sigh of relief in a very stressful situation, as opposed to any type of a turning point or long-term solution. So the businesses remain cautious and the uncertainty continues to be there. Now, when we look at the reactions from media outlets, it's pretty predictable, actually. Media that's on the right side is calling this a historic trade win, when media that is towards the left side are saying that Trump has backed down and shown weakness. But really, I want to know what actually happened. So what did the US actually win? Like, what did they actually gain from a perspective of what did they get that they would not have had if they did not start the trade war in its current state in April of 2025 with the Liberation Day, when things really escalated with China? So from what I can tell, no new concessions beyond reversing the tariffs that were already applied after the April tariffs from Trump. I don't see any structural reforms being guaranteed from China. One possible way you could say that there was a win would be the fentanyl specific tariff, which remains in place 20%. So the tariff on the US it continues to be higher than the tariff that China has uh, on the US. US is applying a higher tariff. But without the April tariff hikes that the US engaged in, that Trump began with the Liberation Day, there would have been nothing to pause or essentially win back. So at this point, I don't really see anything that the United States has gotten that would have been pre-tariff war, that they didn't have pre-tariff war. So, but of course, negotiations ongoing. We will see. You know, a lot of the things that I'm seeing in terms of people that are saying that this is a win, they might point to the market reaction. Yes, but the market is still actually down since Trump became president. So, you know, this is really just recovery from volatility. I wouldn't point to that as this being a major win. You know, other people are pointing to things like, well, you know, China reduced the tariffs, but those tariffs were only in place in response to the tariff war that was started in April. But we will see. We will see. Obviously, it's a very fluid situation. Things change on a daily basis. But really, when we look at Trump's playbook so far, it seems to be coming out hard, escalating things really quickly, sparking a retaliation, causing a lot of concern, and then brokering some type of a deal. And the focus of the deal largely seems to be whether or not a political win can be claimed in the near term, and whether or not there is any long-term benefit to that deal over and above not starting the fight to begin with is highly questionable, and you know, likely the focus is more on the short-term political wins. But then the markets bounce on the de-escalation, and you claim that as a win. So we're just looking here at how things progress over the next couple of months. But as we've said before, there are companies that are better or worse positioned in this type of an environment. You know, really the situation that companies face is complete uncertainty in terms of shifting tariff regimes and what type of retaliation. So one of the things that Trump has said is that he wants to bring manufacturing back to the United States. That's what he's claimed. So if there's big tariffs on companies that are producing in, say, China, they can reshore that production in the United States. They can avoid those tariffs. Now, some companies, no doubt, are willing to do that, but there's a long time horizon. It takes years to do that in many cases. It's extremely expensive. And when you have a situation where tariffs are on and off, there's pauses, there's agreements that are kind of agreements, but they're temporary. Nobody wants to make any adjustments because you don't want to have to go through the expense of reshoring your manufacturing to the United States just to know in a couple of years that the tariff war was resolved and now the tariffs are not in place, or they're not as high as they were. So this is the situation that that businesses are unfortunately having to deal with. Strategic planning is extremely difficult when you don't know the environment that you're operating in. If there were 145% tariffs on China, but people were confident, or businesses were confident that that was the new normal, then they have the ability to adjust. But it's extremely difficult to adjust and adapt in such a volatile environment. But more news will be coming shortly, I'm sure.
Yeah, I just think that it's, you know, interesting how we saw him come so hot out of the gate. Kind of same thing back in his first term. I know Brett and I have talked about this a little bit before. And it's like you can almost just like read Trump's playbook now. It's, you know, comes hot out of the gate and then kind of, you know, eases off a little bit. And does that put you in a better, you know, bargaining position? Maybe, but I don't know. I think there's a debate around it for sure.
Yeah, and I think, sorry, the key takeaway would just be the environment is so uncertain. It's hard for strategic
Mhm.
planning. At some point, that's got to lead to a pullback in capex, which leads to, you know, likely some weaker quarters coming up in some segments.
I mean, there could be an argument that creating the chaos is good for Trump politically, because with chaos, everybody's confused, and there's maybe there are opportunities that open up for him. But in terms of being good for the United States overall, I don't see how turning the entire world against you um, will do that, and creating, you know, such lack of confidence in being able to do business with you in a consistent, predictable way would do that.
Yeah.
Yeah, so a couple of things. So last week I did mention, actually, my prediction was they were just going to keep doing these 90-day pauses when I was going over the shipment and stuff. So I got something right for once for
You
those
did? Yeah.
throw
A
predictions.
broken clock, right?
It happens. It does happen.
I
But
don't know. He's
no,
the reigning champ of the prediction
I
show.
don't
But
think
go
that's
on.
going to happen this year.
Well, one of my predictions was that Elon Musk would be out of the government by the end of the year, and I think that he is, right?
Yeah.
Was my
I think that is
understanding,
right.
although again,
Far less sightings of him.
yes.
Less
Go on,
bus
though, Brett.
sightings. But the other thing on the capex, you're not American labor isn't competing against Chinese labor. It's American infrastructure and technology and automation competing against Chinese labor. So even if you do get this reinvestment back into the US, I don't think those jobs are going to come roaring back. Because right now you don't even have Americans wanting to fill those jobs.
Those aren't the jobs
time.
you want,
No,
right? Like that's the whole thing. It's crazy.
It doesn't make sense for companies to
Of course.
pay American wages over Chinese wages or Southeast Asia wages. We've seen a lot of the supply chain move into other Southeast Asian countries, even prior to all this over the past 5-6 years. So I don't think we're seeing this structural shift back to American manufacturing like Trump and what he's campaigned on at this time, at least. Maybe a year from now, if he really does step on the tariffs, but he seems to be pulling back. And I think we are just going to keep seeing these 90-day pauses or so on and pick out whatever win he really feels like at the time. If it's the S&P going up, whatever, 3-4% on the removal, that's a victory enough. If that's politically convenient, that's where we're, I think, heading.
Well, yeah, if you crash at 25% and then it pops up one day 5% and you claim that as a big victory, right? That's,
exactly.
That's kind of an exaggeration of what we're looking at here in some ways.
Politically, that position likely helped the election, so him getting elected. So, I mean, if that's your goal, rather than really good governance and policy, then you got what you wanted in that respect. But it's very interesting times. There certainly have been some opportunities over the last month and a half to buy some high quality companies. Like we brought a company into coverage that we've been looking at for several years that came down into a range that and now the stock's up 30+%. Just a pop up over the past couple weeks after really strong earnings that drove the company higher, and the market settled down, and that's what we're able to do, is take advantage of some of the weakness and add some new clients that have come in. Got to buy some great companies this year that were 30% off at one point, where they wouldn't have been able to. We had historically high valuations at the start of the year, so you were able to buy. And now again, the markets have crept up. The valuations are higher again. So we'll be a little cautious in the near term, given the environment. Now valuations are higher, but there's some individual stocks we'd buy. I'm not sure if I want to buy the entire S&P 500 right now, after you've had a peak up or a perk up in the
recovery.
Yeah, recovery. That's what we had for sure.